you've been tricked. It's David White sitting in for Tom O'Brien. But as we do every Friday that we can, we talk technology. This is the Tech Insider Hour, and I'm your host tonight, and that is David White, and we'll be talking technology. If you want to ask a broader question, not just a very narrow one about a stock, what's going to do in the next few minutes, or even the next couple of days, why don't you call in at 877-927-6648. We'd love to talk technology with you. We're going to do a kind of a roundup, what I think is probably the most important news events, which probably are not the same thing that most of the financial TV shows think are important. Always looking for something out there that will give us an edge in a trade going forward. We have a few things out here today. Of course, I am the author of the Tech Insider. It comes out each Friday at TFNN. You can always go to the front page of TFNN and check it out. If you're in the Boston area, I think Tom O'Brien will be doing a show tomorrow. So you want, if you haven't signed up yet, I think maybe you still have an opportunity to do so. Check out the front page of TFNN.com. Also, of course, we've launched the Art of the Charts. We're going to be looking at a few Gartleys today, sprinkled in with the show, kind of like the guy that comes along and grinds just a little bit of cheese on top of your fettuccine. We'll be sprinkling those in just to spice up the show a little bit during the day. So probably what is the biggest news in the market this week, at least in technical news, not so much stock market, probably Windows doing a mea culpa. And when we're talking about Windows, we're talking about Mr. Ballmer, the CEO of Microsoft, has been for what, 12 years now, something like that. Anyway, there's nothing he's touched that really hasn't blown up in his face over those 12 years. Most of the stuff that has been successful was before he came to be the CEO, and still having problems. This week they finally said that they're going to release a major upgrade that is going to get away from the touch features of Windows 8 and allow people to use it a little bit more classically than they had before, citing a tactical error enforcing the touch-centric Metro-monikered interface on keyboard and mouse-oriented PCs. It's easy enough to defeat it, and if you go to Google, you can check out ways to make sure that you don't come up in the tiled interface. But I don't know if it's as big a deal as a lot of people are making. I think the biggest deal is the way that they're talking about handling updates from now on, and that is you might get a Windows 8 update every 3 months. They've codenamed it Blue, and the idea is that you just every 3 months you'd have slightly a newer operating system, maybe some new features or something like that. But instead of waiting for just service packs, they would include feature improvements over the life of the product. Of course, the Windows 8 Redux is already being compared to the new Coke of a few decades ago. And the problems with it. But Windows has been kind of on a tear, mostly because, or let me put this, Microsoft, not Windows, been mostly on a tear because we've had some activist investors coming in and talking about splitting the company up into a productivity software division like Office, into a server division for like Windows Server and all the other tools that they have for handling business and back office, and then a consumer operating system division that would sell things like Windows 8 and a handful of other products. And maybe they'd be able to actually unlock the value of Microsoft that's been bottled up, probably because at least missing some of the ground floor level developments of things like music, tablets, phones, and they're still a decent company, and a lot of thought into splitting them up may actually unlock the value that is in Microsoft. Mostly that is the bounce, and at least some people think that there is enough groundswell to remove Steve Ballmer from the CEO position, and I think you'd see maybe another couple of bucks out of the stock if you can get that done. But I think that's, at least in the big tech windows, or the big tech area, probably the big news of the week. Other things going on, we've seen First Solar come out this week, and like a lot of stocks that with highly short interest, they've been running up over the last few weeks. Really reminds me somewhat of the dot-com bubble, and bubbles can go along for a long time. This one kind of sold off on the last bit of news. The big thing that I want to bring up out here is there are a few stocks that are just getting either way overvalued and or have problems, and you may want to steer clear of them. First Solar, of course, is the solar cell company, but this week we had two major warnings from two men of the street that have a fairly decent and well thought of reputation. Let me put it that way. These aren't the guys that come out and say one thing and do another. They've been pretty good. First, Jim Chanos is already the famous short seller that uncovered Enron's fraud, and some others out here, is short, and he's warning on what's going on underneath the books. No one can really model this company, and normally that's a good sign of things like front loading, i.e. pushing a lot of things into this quarter to make it look good, and others. The stock had been running rather flat for a while, and what did we see? They hired one of the big cheeses from Enron. And there's kind of a question of his ability to ethically run the company. But when you see somebody like Gordon Johnson from Axum Capital, who's probably the biggest guy on the street when it comes to analyzing companies in the solar space and the alternative energy space, he put out probably one of the strongest memos this week that I've seen probably in 3 or 4 years, almost actually calling us First Solar a fraud, and reminding us all that the CEO was one of the unindicted co-conspirators in the Enron debacle. I don't know really what the CEO has been doing, but when you get enough of these people saying this and these kind of things that have a decent reputation, not for just trashing a stock, I want everybody to know that there is some issues out here, and you know, maybe these guys are short. Maybe they're willing to risk their reputations. But my guess is these guys have been pretty true blue up to this point. Just make sure and keep an eye on this if you're going to be in it, for any kind of signs that maybe the books are coming in. You know, some of the stuff can be as easy as shoving sales into this quarter, and then, of course, you really disappoint the next quarter. A lot of times people are always trying to keep up with what the street wants, trying to please it, and it ends up robbing Peter to pay Paul, and one day you get the huge 25% haircut or 50% haircut in the stock when they can no longer perform. Just a fair warning out there on First Solar. Symbol is FSLR if we're looking at home. Over the last couple of days, Tesla has been on a monster move. One of the reasons has been a 46% short interest rate. We do want to talk about some of these that are overpriced. Up another $7 today, and you know, 76 was its close. Still try trading like that after hours, so not so much. Now the question is, how much is Tesla worth? Not is do they make a decent company or a car? You know, we had Consumer Reports come out and give them 99 out of 100, so maybe one of the best cars they've ever tested. The question is, what is a car company worth? What do you evaluate them at? And even if we looked at last night's closing price of just under $70, they are worth more now in the capitalization than Fiat and Chrysler. We'll probably cover this a little bit more when we come back. But my guess is a car company that makes 20,000 cars, are they worth more than one that sells millions of cars, a couple million, 2, 3, 4, 5 million cars a year. It's awful hard for me to believe that maybe we aren't seeing just a little bit of a bubble in some of these stocks like Tesla. We'll talk a little bit more about this when we come back.